Diane King Hall joins us for a look at some stocks. Last week's biggest winner, kicking this week off with an upgrade, Boeing. Diane, what a leader to have.
Yeah, indeed. I mean, this time Melius Research is joining the chorus of recent upgrades that we're starting to see around Boeing. And it's not just about the fighter jet win from the government. That is one of the catalysts that it sees. So Melius upgrading Boeing to buy from a hold. Their new price target is $204 a share. Part of, again, the catalyst that they see for it is the major contract with the Air Force for that next generation air dominance program. That's a big win in the defense sector for Boeing. Another factor that it sees as a catalyst for this is the deliveries of 737 aircraft. They actually expect them to be faster than expected after, the turmoil that Boeing has seen in recent years, honestly, and especially last year. And they also see a strong leadership under Kelly Ortberg. They believe Kelly Ortberg is the right leader for Boeing to make this turnaround. We've seen some of the commentary from Kelly saying, the company needs to come together and staff need to come together. In terms of the impact of the contract, the defense contract, that's expected to bring in, according to Melius's view, roughly $20 billion in defense revenue over the next several years, and as much as $60 billion over a longer time span. So again, the defense win there is a big part of the catalyst that Melius sees, but that's not the only one.
Wow. Well, I mean, they're also downgrading LMT, so it seems like, pretty clear message there, and Lockheed is down. Sounds like that was a big win for Boeing.
Yeah, it was. It was definitely a big win for Boeing. And to get into the Lockheed downgrade, I mean, that's not the only one who's downgrading Lockheed today. You've got a pair of downgrades hitting that stock. So Lockheed being downgraded over at Bank of America and Melius Research. Again, Melius is seeing that the impact of losing this contract for Lockheed is going to be difficult for that company. They're expecting Lockheed to essentially be range bound from here. It's essentially seeing limited price action. So you're seeing the share price reaction today down 2% off the back of those downgrades. Melius now sees it as a hold. They've lowered their price target to 483. They previously had it as high as 603. Again, that was influenced by that win by Boeing on that contract, and then just growing concerns about Lockheed's long-term prospects. Also, their concerns from Melius's point of view about Europe's efforts and its reliance on U.S. defense contractors, and they think that will limit Lockheed's export opportunities and just growth potential. They'll put a cap on it. So the outlook for Lockheed is more difficult from the point of view of both Melius and Bank of America. Bank of America's price target now is 485 for Lockheed. Previously, that is down from 685, Oliver, and they've downgraded it to a neutral from a buy. So both of them have basically slid Lockheed over in the neutral camp, and just don't see much movement from where it's at now.
Okay. All right, so at least, I guess this is analysts saying that the selling's over, but not super bullish for Boeing. I don't know. I guess anything that's, if you're upgrading Boeing at this point, I think that's, the market's going to take that as bullish.
For Boeing, yes, that definitely makes sense. And it, especially like you feel like last year, especially by the end of the year, they really had their kitchen sink quarter where they kind of threw everything in. And the skies are looking a little more clear for Boeing, especially with this big win of this defense contract. Again, that's a big blow to Lockheed, but it's a win that Boeing needed. So it shows, to Melius's point, that the leadership shift at Boeing is taking hold. And again, their view is it's not just because of that defense contract. They're expecting faster deliveries. And we know this is a duopoly, so at some point, Boeing was going to have to figure it out.
Got it. All right. Thanks. Appreciate that. Okay. Good clarity. One that's a little surprising, perhaps.
Same for me.
Yeah, is this upgrade on FedEx. Someone at Jefferies really sticking their neck out after last week's earnings drop.
They are. This could either be a great call or completely, wildly, I don't know why this is the call. Basically,
I thought they were in like a world of hurt still.
Buy. I know. So Jefferies is putting their neck out there. They've upgraded FedEx to a buy from a hold. Now, they have lowered their price target to $275. They previously had their price target at $300. They think that the market is, quote, overly distracted by the macro. Of course, we know FedEx has taken a big hit. It hit a new 52-week low recently. But, analysts over at Jefferies are saying, hold on, this might be a buying opportunity here. Stock's down double digits this year. Their optimism, where this is coming from, is the decision to spin off the LTL, the less than truckload freight business. They think that will unlock shareholder value, and they think that that's essentially going to be a strategic positive change for the company. And they're undergoing this cost transformation, the initiatives like Drive, Network 2.0, Tricolor Initiative. They think that will streamline operations and boost efficiency. You are seeing an upbeat response in the market, up 3% right now, and they think that, the macro picture is not going to hit FedEx. I guess they think the market is too concerned about the macro picture compared to the cost efficiencies that FedEx is trying to put in place.
Okay. Well, that's interesting.
It's wild to me, but we'll see.
I know they reduced their price target,
they did reduce their price target.
It might be a little bit of
a talked about the macro picture and tariffs and and the headwinds that they're facing. And it was the third time in a row that they lowered their forecast. So I don't know. We'll see.
It's kind of one of those trader sayings, if you loved it at 300, you're going to love it at 238, right? Because, they liked it at 300. All right. Or they rather thought it was worth 300. So, all right.
Yeah.
Interesting, though, to see the positivity pretty much across the board, except for the Lockheed thing, which is Boeing's win.
That one makes sense. Yeah.
So, all right. Thanks, Diane. Never hurts to continue strength from last week's winner with Boeing up another 2% today.